prices continue hurting our economy, and the latest jobs report shows the economy is cruising but growing at its slowest pace in more than a year. Former White House economic advisor Steve Moore joining us right now. Great to see you. Happy Monday, Steve.
Hi, Jan. Good morning.
The latest jobs report looks good on paper, right? It shows the economy is growing. However, it is the slowest pace since April of 2021. So is this indicative of the labor market starting to cool? And what does this mean for our economic outlook?
Well, it's still a good jobs market out there. There's no question. We did get 400,000 additional jobs in May. That's a really strong number. So that's the good news of the story. Anyone who wants a job out there right now, Jan, they're out there. No question about it. Now, that's the good news. The bad news, of course, is that inflation continues to rise. And we've had month after month now for about 9 months where the inflation rate of prices of the goods and services we buy, everything from gasoline to food to travel, those costs are going up faster than people's paychecks. So over the last year, Jan, we've had wages rise by roughly 5%, but inflation is running at roughly 8%. That means people are in a hole. A lot of economists believe that there is an inevitable recession around the corner. Whenever we have inflation this high, to get it down oftentimes cause an economic contraction. I still think there's time to reverse course and get things under control, but we better do it quickly because there are signs that, for example, a Gallup poll found that only 2 out of 10 Americans today rate the economy as good or great. So Americans are very nervous about where this economy's at.
And what can the president do at this point to avoid a recession?
Well, I think we got to get government spending under control. I think that it's pretty obvious we spent way too much money last year and just flooded the economy with trillions of dollars we didn't have, and that caused inflation. I think it would be smart, too, to start drilling more for our energy, our oil and gas and our natural resources in this country. We should be producing 2 or 3 million more barrels of oil a day, and that would actually increase our production on our GDP and jobs, but it would mean that we wouldn't be so dependent on countries like Saudi Arabia and Russia. You saw the president is pleading with Saudi Arabia to increase their oil production. Hey, maybe we should increase our oil production in Alaska and Texas and Oklahoma.
Right. And especially when you see gas prices creeping up to $5 a gallon, the national average. I know, right? It's funny because I get emails from people in California who say it's been over $6 for a long time, Jan.
That's the average, Jan. That's the average now in California. I was looking at the AAA numbers last night. The average price of unleaded regular gasoline in California is now $6.19 a gallon.
So, Steve, I know, it's crazy. The Fed right now is expected to increase interest rates in both June and July, so later this month as well as next month. So what's your thoughts about this at this point? Is it too little too late? Does this make you nervous now when you see some of these interest rates rising because it could perhaps collapse the housing market?
Well, Jan, I've been saying on your show for the last 6 to 9 months that the Fed has got to start acting and that they can't pretend that this, remember last year they said it was transitory inflation, meaning temporary, but it hasn't been temporary. So yeah, the Fed has to take action. We can't get a strong economy again where people feel confident about things until we get that inflation rate down. And that's going to require 2 things. It's going to require the Fed to raise interest rates, and it's require more output of goods and services. And that's why I was interested in that story you were just talking about China and the tariffs. I'm of mixed minds on that. On the one hand, that might lower prices a little bit, but a lot of Americans are concerned that these supply chain problems, Jan, are a result of too much dependent on China goods.
This is true. Major corporations have already started laying off employees. You got Netflix that already cut a couple hundred jobs. Tesla's going to lay off 10% of its staff. Are we going to start to see companies do this to try and avoid problems down the road with talks of a recession?
Yeah, I think so. I think you're going to start to see a slowing of that, good job growth we've had for the last 6 or 9 months. Again, I'm not saying we're going negative. I think we still can steer around a recession, but it's a very precarious time. You got to get inflation under control. There were about 6 or 7 major companies that said that they're either going to freeze employment now, or they're going to, or they're actually going to cut their workforce. So. My advice to people, if you've been sitting on the couch waiting for the right time to get a job, get it now.
Get it now.
Get it now before the jobs go away.
There's plenty of jobs open right now.
Yeah.
All right, Steve, always great to see you. Happy Monday to you. Hope you have a great week. Thanks for joining us.
Have a great week. Take care.